Hi, I'm John Winiger, Certified Financial Planner and Fiduciary Wealth Advisor at Endowment Wealth Management. And if you're interested in learning how to defer and potentially reduce your capital gains liability, then I suggest continuing to watch today's video. And so in particular, one thing I want to talk about today is recent IRS clarifications on the types of assets and gains that can be invested into qualified opportunity zone funds. And so if you don't know, qualified opportunity zones are a creation of the 2017 Tax Cuts and Jobs Act. They allow you the potential to reduce your taxable capital gains by up to 15%, among other benefits, to investing in a QOZ fund. And in particular, one thing that the IRS recently clarified is that Section 1231, which is property used in business, if you sold that property and you have a gain, that gain is eligible to be invested in qualified opportunity zone funds. So that's step number one. The one point to clarify on that, I wrote it on the board, is that the gain must be netted with 1231 losses. So you can't just take the gross gain and invest that in a QOZ. It needs to be netted with 1231 losses, if any. So take your 1231 gains, subtract your 1231 losses. If you have a net gain on your 1231 property asset, you may be eligible to invest that into a qualified opportunity zone fund and, in effect, potentially obtain the tax benefits of doing so. So that's really point number one. Now, normally with a qualified opportunity zone, when you sell a piece of property at a gain, whether it be a stock or any other type of property, it's very flexible on the types of assets you can invest into a QOZ. But normally you have 180 days from the date of sale in order to reinvest those funds. But the second thing they clarified is that since you need to net 1231 gains with 1231 losses, the 180-day window doesn't begin until the end of the tax year, so 1231. Okay, so that's step number two, which leaves open an opportunity if you sold 1231 assets in 2018 and you experienced a net gain. The 180-day window didn't start until 12/31 of 2018, meaning you have until June 28th, about less than a month away, to reinvest those gains into qualified opportunity zone funds and potentially reduce your taxable gain by up to 15%. So that's why it's a very important topic to note. Is there's a time period here that we have. And you may not have known that those gains were eligible to be deferred. So if you don't know much about QOZs or QOZ funds, our investment team here at Endowment Wealth Management is doing all the due diligence and determining which funds to invest in. So we've got that going on. And then if you have this type of property that you have a gain on, you're not sure, I recommend, number one, bringing it up to your CPA, your tax advisor. Then number two, I'm happy to get on the phone with you and your tax advisor to discuss whether or not this is even a possibility. But it's something to look into given the potential tax benefits of investing in a QOZ. So if you want to learn more, check out our website. We've got www.endowmentwm.com/QOZ. All the information and links on QOZ funds and investing is there. If you have questions and want to discuss your personal situation, please feel welcome. Shoot me a message, comment, or give me a call at 920-785-6886, and we'll see if we can get you moving in the right direction. So until next time, take care. Thanks.